Assalamu alaikum, everyone. We have a very important topic today, that is Basel III leverage ratio. And the question here is, what does it do to Islamic banking? So the Islamic banking business, as we know, is based on the Quranic commandment that Allah has permitted ALBAY and prohibit riba. That we all know very well from Surah Al-Baqarah 275. And so the mission of Muslim is to conduct the banking business based on ALBAY and not based on riba, because the banking business is the entity, or it is the vehicle where riba predominates, because in the banking business, as we know in general, that the bank takes deposit and pays riba to the depositors, and using the deposit fund, the bank uses the fund to make loans and charges interest. So if the deposit rate is 2% and the loan rate is 5%, then the bank will be able to make a spread or a profit of 5% minus 2%, that is 3%. So that is the essence of the conventional banking business. And we are supposed to see the swapping of ALBAY into the riba system, or into the banking system with riba, as if it is just to do some kind of transplantation of the ALBAY system into the banking system with riba. But that is not the case, because we know that currently the Islamic banking is hugely converging into the conventional banking through the practice of several products such as Bay al-Ina, that was now not encouraged by the regulator, but now the use of tawarruk all over the banking transaction is basically evidencing the convergence of Islamic banking into conventional banking, because the nature of this product are very similar to the riba product, whereby the effect or the implication or the terms and condition of this so-called Islamic product are very similar to the riba product. But the Quran has condemned riba, where riba is evil, riba is unjust, and Allah has promoted ALBAY to be the alternative to riba. So ALBAY must be just, it must be able to offer a much more equitable terms of contract relative to riba. So we are looking forward to see how ALBAY can be conducted in the banking system. But the banking system, as we know, is a system that uses leverage money to make loans. So that is why we are going to look at the Basel III leverage ratio, because that is the basis of how the bank operates their business to make money, by using this leverage system. And which I repeat, that the Basel III leverage ratio, it allows the Islamic bank to use leverage money to make loans, rather than to use the capital money or their capital fund to make the loan. Of course, using capital fund to make loan will not be a viable model for banking, because the capital fund is much more expensive than the loan rate. right? Capital fund, the expected ROE can be 15 to 20%, whereas when they use the capital fund to make loan at 5% for mortgage, or at 4%, the vehicle hire purchase ITAP, then for certainly when that is going on, the bank will end up in making losses, because the cost of fund, which is 50%, is very much higher than the loan rate, that is about 5%, and the bank will be a loss-making business. So that is why the conventional bank uses leverage money, where the cost of fund is much, much lower than the loan rate. So the cost of fund, FD rate, for example, at 2%, and the loan rate at 5%, then the bank will be able to make profit, of 5% minus 2%, that is 3%. So that leverage system or leverage funding is a very, very important ingredient or component of the conventional banking. And they do not have to use their own capital to make the loan, because, as I say, it will not be a viable model or a viable strategy for the bank, because you will end up in losses. So in the banking business, a bank uses borrowed money instead of capital fund to make loans. And just to repeat, leverage is a business strategy that uses borrowed money to generate profit from interest-bearing loan. But this borrowed money, of course, is acquired from the riba system. So meaning that the conventional bank will offer this deposit product, whereby the depositor who will be, supplying the so-called loan to the bank at a stipulated interest rate of, let's say, 2% per annum, and the protection of the placement. So at maturity, the bank will guarantee the depositor the full sum of their placement plus interest, right? So meaning that the depositor who supply this leverage money, they don't have to worry about, missing out or seeing their capital or placement to diminish, because by way of contract, by way of the loan contract, by way of the leverage contract, the bank will guarantee full redemption of deposit and fixed interest as agreed upon in the contract of the deposit at maturity. Okay, so meaning that we will go into this system of lending and borrowing in the funding side of the balance sheet, as well as lending and borrowing from the asset side of the balance sheet. But the idea here is that the implication, the implication of using leverage money to make loan is not only about the use of riba deposit to make riba loans. That is essentially convenient for the conventional bank, because they are using leverage money, which is deposit, at a lower cost to make loan, where the loan rate is always higher than the leverage deposit. It is convenient for the bank. It will be profitable for the bank. But for Islamic banking, such structure of the banking business that is using leverage money will make it very difficult for the Islamic bank to apply ALBAY in their respective domain of business. Meaning that the use of leverage money, or the adoption of this leverage money banking for Islamic banking by way of using ALBAY, will not be possible, will not be easy. And we have seen that for many years, the Islamic bank has been offering sale-based product, such as BBA or Bay Al-Ina, where there is no sale, there is no real sale. It is just a sale with a label, but there is no movement of ownership from the bank to the selling party, or from the selling party, from the bank to the buying party, and from the buying party to the bank. So this kind of sale has not been existing since the Islamic Bank was set up, simply because that the sale, when a sale is funded by leverage money, then it will be very, very difficult for the bank to manage risk, as the sale by nature or by default is always a risky product, because it is exposed to what we call business risk, right? So in other words, it is not easy to replace riba with ALBAY, as the exposure of ALBAY to business risk, meaning that ALBAY consists of sale, which is true sale. It is consisting of true leasing, which is operating lease. ALBAY is also equity, which is partnership. Salam and istisna, this is forward selling, forward sale. And all of these sales by default are very risky, because they are exposed to what we call business risk that are coming from ownership risk, they are coming from inventory risk, coming from price risk, and this collectivity of risk in ALBAY, namely business risk, will make it very difficult for the Islamic Bank to manage, because this ALBAY has been funded by leverage money. They are not funded by equity money, which is a possibility, because if the bank is using equity fund to finance the ALBAY, then there is a matching of risk appetite, because the equity fund, the risk appetite of equity fund providers will be, matched with the risk appetite of the ALBAY transaction. And we can see that under this equity funding, ALBAY will be a possibility, but it will not be a possible venture if the ALBAY is funded by leverage money or funded by the deposit funding Islamic Bank. So we can continue further into this polemic of leverage funding in the next video. I'll see you inshallah. Assalamualaikum warahmatullahi wabarakatuh.